Yeah, there we go. Now I think you can hear me, right? Looked like my volume was muted there. What's going on, everybody? Chris Franks with Texas West Capital. Coming at you live here just after 11 a.m. Central Standard Time on Friday, the 23rd of May, 2025, right before the weekend, for the Memorial Day weekend, right? Yeah, so yeah, we're going to talk about Bitcoin hitting its new all-time high and where we may be going from here. We'll talk about take a look at like Ethereum, the dollar definitely. Toot my horn a little bit. Bitcoin continues to go up, dollar continues to go down. The same thing I've been telling you guys, even when the rest of the kid analysts out there, I guess you could say, were telling you the opposite. There is something to be said for experience. It doesn't mean I'm going to always be right, not at all. But that's why risk management, proper risk management, is so important. Am I right, guys? I mean, that's what it's all about. Remember, trading is a game of losing. So the better you can lose, the more likely you are to win, right? What do I mean? I mean, the better your risk management, right? So you're not just go YOLOing out there on something because you're FOMOing in, right? FOMO plus YOLO, just is going to result in you losing money. And so we're going to talk about that. Look at Fibbo here. He says, you got that right, all caps. By the way, Fibbo and I are going to be working on something that I think is going to be pretty freaking amazing. So I'm saying it out here, so we have to stick to it and actually work through it and figure it out. But my display is small. What do you mean my display is small? Let me see here. Picture frame is a little bit smaller than usual. Is it? Wonder what the deal is. Let me see here. Change that. Oh, that was weird. Okay. Well, hey, there we go. Thank you for noticing that, guys. It's harder to see on my end here, but yeah. But anyway, so Fibbo and I are going to be working on something, and we'll see how it goes. But I think it's going to be absolutely amazing. It was Fibbo came up to me and said, "Hey, Chris, man, what do you think?" And I said, "Dude," he says, I don't know. What do you think?" I'm like, "Man, I think this is probably a pretty amazing idea." And that's all you guys get right now, okay? Do me a favor before we get going here. Hit the thumbs up, hit the like, hit the share, especially hit the share, guys. Leave a comment afterward unless you're an idiot. And what I mean by that, you get on there just to kind of feel big about yourself by being, rude and disingenuous and all the other silly stuff. I don't know. You guys, sometimes the young generation, God, I feel so old when I say that, but I don't get you. You get up there to say something, rude or whatever, just to say it because you think it makes you look good, I guess. I don't know. The rest of us are just kind of like, ooh, yeah, that's not so good look for you, but hey, whatever, okay? Sat says, come on, how about a hint? That was your hint. We're talking about something, me and Fibbo. That's the biggest hint you get. Fibbo's not going to tell you either. Fibbo, don't you dare tell them. We'll let them know when we get it all figured out. Also, guys, hey, listen, if you're in TWC or if you're thinking about getting in there, I am actually working on putting together so the way I teach usually, the whole thing at TWC for us is about teaching you guys about human psychology. That's what Fibbo and I do, right? We approach it, the way in which we trade is a little bit different, but we approach it from the same basis, right? And so when I come in here, the way I teach is, I teach you things like Elliott wave and Wyckoff and price action, SMC concepts somewhat, the more important ones. A lot of SMC stuff, guys, I'm going to tell you right now, is just Wyckoff and Elliott wave. It's got a couple of cute little names with it and whatever, but at the end of the day, a lot of their setups and whatever are nothing more than setups that you see with Wyckoff and with Elliott wave. But there are some other concepts in there that are a little bit helpful for traders, and so we teach those as well. And then really focus a lot on getting you to understand price action and volume, because that's really what it's all about. It's about that psychology, right? Anyway, I have never really taught like a completely integrated section of it where everything is together at once. I've been actually working on that. So I've got something I'll be putting out here before too much longer. And if you're in TWC, you'll be the first ones to get a look at that. So it's exciting. Hopefully help, really focus on the things that matter, the most important parts of those other things that I teach you all together in one strategy to get y'all just to help you get better, right? So anyway, yeah. Let me see here. Alvin, man, Alvin, what's going on, buddy? I love Alvin because Alvin lives on the other side of the planet, and it's always so late when he joins in with me. And so, but Alvin's fantastic because you know what? He's come in here, he stuck his nose, to the grindstone, really took in what I was teaching, and he's, just continues to blow us away with what he's doing. He made a post recently in TWC about showing us basically one of his retirement accounts that he's created there and working with, and just absolutely incredible returns on it. So really excited about it. But anyway, yeah. So lots of stuff going on. Maybe we'll even take a look at gold today and some other things. But the gold today really kind of is talking about Bitcoin a bit and seeing what's going on. Okay. And so other than that, I just want to tell you guys again, risk management. It is the most important thing you're going to do day in and day out as a trader. If you're listening to anybody else out there and they say anything other than that, and they tell you, oh no, your entry is more important, and your strategy is more important. If anybody's telling you that, please walk away, because they do not have your best interest at heart. Okay? I'm going to tell you, I've been doing this 30 freaking years. It'll be 31 years this year. Fibbo's been doing it damn near as long. And he will tell you the same thing that I'm telling you right now, which is, listen, your risk management is absolutely the most important thing, because here's the thing. You're going to be wrong, guys. No matter how long you do this, no matter, how good you get, you're going to be wrong. That's it. That's the end all be all of trading. You have to understand that and accept that, like really accept that in your heart. Because until you do, you're going to do everything but pay attention to risk management. If you're lucky, at best, you'll give it a flirting kind of glance. And that explains why you're not consistently becoming profitable as you're trading. It really does come down to being as simple as that. I always tell you guys, trading is simple, but it's not easy, right? It's simple because price really just moves from one liquidity pool to the other, right? It's all price is doing is seeking liquidity day in and day out. That's all it's doing. That's simple. It's not easy, though, because you have to get out of the things that all of us think when we first enter trading. I am no different. Sometimes I get people on there go, oh, why are you trashing retail traders? And people like that, I'm going to tell you right now, they just don't get it. They're the people I'm talking about right now that need to change the way they're looking at it. Because I don't come out here and trash traders, retail traders and whatnot. I tell you, listen, you're probably doing this. I know because I was there, I did it. I know because I've been doing this for 31 years and have to talk to thousands and thousands and thousands of traders. And almost exclusively, every retail trader does the same thing. In every market, guys, whether it's crypto, whether it's stocks, whether it's Forex, whether it's futures, precious metals, whatever you want, energy, everybody comes in retail and thinks the same way. So, the thing you have to do as a trader is you have to get off of doing what everybody else is doing, right? I keep telling you guys this. If 90+% of retail traders are out like within 3 months, right? Lost all their money in the market. And they're all looking at the same free information online. They're talking about the same patterns, right? And they're all ignoring the same, ideas about proper risk management. If you're coming in and doing that, you're going to get the same result. You have to change. Okay? You have to change, guys. It's all there is to it. Any of you that listen to my story, my first few years just sucked royally. And I had to make that decision that, listen, I've got to get serious about this, and I got to figure out what I'm doing wrong here. I have to become a student of the market if I expect to do this for the rest of my life. Because I'm going to tell you what, I didn't want to work for anybody. I didn't want to work for anybody when I was, growing up. My dad was military career Navy guy, senior enlisted, refused to go officer because he said he didn't want to be one of the 20% doing 80% of the work. And yet he did it as a senior enlisted. So it is what it is. But the one thing that he told me when I was growing up that it just really rubbed me wrong was I would see how upset he was sometimes with some of his seniors, some of his guys that were, above him. And he would tell me, listen, I don't agree with them. I don't like them, whatever, but I have to respect the rank. I have to respect the uniform, right? And I just, growing up, that always kind of rubbed me wrong. I'm like, I'm not going to spend my life, having to do what some Yahoo above me says just because they're above me. If they say stupid stuff, I've still got to do it. I've still got to agree. No, I couldn't do that. So I had to decide, that if I was serious about doing trading, so I didn't have to do that, I would have to get serious about it, legit get serious about it. And that's what I did. And you have to make that same decision as well, guys. Okay? You have to make that decision. And a lot of times what I'll get when I'm posting online is I'll get a lot of, you need to post more charts. Stop posting all this other emotional, mental stuff, the psychological stuff. Well, the emotional, mental, psychological stuff is the most important stuff I post. It is the stuff that's going to absolutely have the greatest impact on whether you become successful or not, or how successful you can become. That's why I talk about it so much. But see, when we first come into trading, we're not thinking about all that. We're just thinking about, show me the system, the holy grail system that's going to make me rich. That's what we all think about. And then we don't ever really learn them anyway, because there's a lot of psychological, emotional stuff under that so that you can do it properly, right? So what do? We jump from system to style to technique. You buy course after today, you buy course after course after course after course, right? And you don't get any better. That's why I did mine different. That's why the way that what we do at TWC is we will teach you these strategies and techniques or whatever, but it's always with the understanding that this underneath is how and why prices move the way they do, how and why the market moves the way it does. Because the goal is that when you're learning this stuff, you're getting a deeper understanding of how and why markets move the way they do. And you can use that to create your own system. Because ultimately, that's what you have to do, guys. I'm going to tell you right now, if you think you can just learn somebody's system and that's going to make you rich for the rest of your life, you're wrong. You're wrong. All of us, because we're different. We have different, short, mid, and long-term financial and wealth goals. We're at different positions right now, financially and wealth-wise and life-wise than the next person is. We have different considerations that take up our day. Some of us work full-time. Some of us work part-time. Some of us don't work at all. Some of us work more than one job. That's going to affect the way in which you can trade. Many of y'all try and trade while you're working. I'm going to tell you what right now, if I was if I had you working for me and you were trying to trade while you were working, I would fire you in a minute. And you should do the same if you were in charge as well, because you're not being paid to trade while you're working for somebody else, right? But the other thing, more importantly for you, is that if you're trying to just grab a trade while you're working, you're not putting in the time that you need to focus on what's going on in the chart. And what that means is you'll become much more emotional, and you'll make a lot worse trades when you're doing it, when you're trying to just jump in there real quick in the middle of the day or do something like that. Does that make sense? So you have to figure out all these things that make you who you are as far as a trader or investor goes, because only then can you decide, okay, well, what time frame should I be looking at? Guys, listen, most of y'all should be looking at the daily time frame, honestly, because you've got other commitments. You've got full-time jobs. You've got families. You've got all this other stuff. You shouldn't be looking at anything under a daily time frame. But yet here you are checking your phone every on the 5 minute, 1 minute time frame every, throughout the day, constantly throughout the day, right? And that actually hurts you a lot more than it helps you, because that's not what you should be doing, because your time doesn't allow for that. But you've got to figure out all these things to figure out who you are as a trader or investor. Most of us don't know who we are as people to begin with. We never stop and think about it. And we just kind of make decisions off the hoof, right? We just kind of, I'll just go ahead and do this, or I'll do that. Whatever it is, not even just trading, right? But it does bleed into trading. And so when we get into trading, we make those same kind of off the cuff kind of decisions. And then we wonder why we're constantly losing money. That's why. You haven't defined who you are as a trader or investor yet. So you're doing opposite of what you need to be doing when it comes to the charts and the time frames and how you should be trading it. And then when I talk to often with traders about this, they'll be like, well, but so if what you're saying is this, then I should probably only be trading the daily, but that's not going to get me rich enough quick enough. I mean, basically that's what they say. So I need to trade the 15-minute. Or when I say, hey, listen, you got to use proper risk management. Here's how it goes, right? Trading is a marathon. It's not a sprint, right? And they'll be like, but I'm not going to get rich enough quick enough. So I need to do it. I'm like, okay, so you've been doing what you've been doing for how long now, and you're constantly losing money. You're no better off. As a matter of fact, you're probably worse today than you were when you started, and yet you keep doing that same thing because that's your mindset. I hope this is hitting home, because this is the reality. This is what you need it to click, guys. You need it to click. I can't force it to happen. I put the information out there all day. TWC, I talk about it all the time. Here I do, all the time as well here. But until you actually accept that in as truth, like really accept it in as truth, and then start focusing on those things that you need to focus on, it's never going to happen. This is what happens. So you end up, here's what happens with most people. They should be making a lot of money in the Bitcoin bull run, or even stocks, right? But they're not. They end up getting to the end of the cycle. If they're lucky, they're where they were when they started. But most, believe it or not, most traders are worse off. How can you be worse off at the end of a bull run? It's because it's not proper in your head the way you should be thinking, the way you should be understanding, the way you should be approaching. Okay? Does that make sense? But, again, I can't force you to do these things. All I can do is bring it to your attention like I'm doing right now and hope that you do it. Because, guys, listen, I'm going to be honest with you. I don't have to do what I do with TWC. I just trade them on, that's fine, and just be doing that. But first of all, trading on your own is boring. I've done it for many decades. It's boring. It's been a lot more fun with TWC. And now we do live trading on Mondays, Tuesdays, and Thursdays with these guys. And that's so much fun. Talking to other people about trades throughout the day, seeing what trades they're looking at, charts they're looking at, and be able to share yours. That's fun. It keeps it more interesting, right? But most of us continue to do the same things that everybody else does in every market that I have noticed personally myself going on 31 years. And of course, what I did when I started. There's no sidestepping that, because we're human beings. We're drawn in by the lure of quick, easy money. We think, oh, I don't have to work that hard. I can put the money in and it'll make me money. And the thing is, for most of us, especially at the beginning of a cycle, we can do that. If we just put money in, we just left it alone, we'd be so much better by the end of the cycle. But we ruin it for ourselves because we try to get cute when it starts pulling back. And so we try to exit at the highest point, and we try to enter at the pullback lowest point. And what we end up doing is, because corrections can often be much more complex, we end up losing money. We lose money in the chop. And so anything that we made on that rally, most people end up losing on the pullback. So the one thing I talk to you guys about often is trade in the direction of the trend. And what people love to do is, when it's a pullback, they'll, like the daily trend is up and it starts pulling back, they'll zoom into the 15-minute. They'll go, but look, the 15-minute is down. You're just trying to make things fit your narrative. And we do that, not just in trading, but in life, guys. Think about it. Think about everything that you do. In life, you're often going to try and fit whatever you're thinking about, whatever you think has to happen or you want to happen. You're going to try and fit it into your narrative, whatever's going on, whether it's true or not. Most of the time, it's not true. So we do the same thing in trading, right? The trend is up. The daily trend is up. If we're getting a pullback, oh, but it's 2 days of pullback. So the trend is, no, it's not down. Overall, your trend is up. If you've got higher highs and higher lows, your trend is up. So what does that mean? That means you don't short. That means you don't short it. You buy the dips. If your trend is down, you're selling the rips, right? You're shorting the bounces up. And if you can just do that one thing, that'll probably get rid of about 50% of your losses right there. Just focus on buying on the way up and selling on the way down. Now, at some point, price is going to reverse. But if you do focus on this, that's about the only place you'll really get caught. And if you're using proper risk management, you'll be just fine. And then the trend will establish itself in the other direction, and you'll notice, oh, okay, now we're going in the other direction. So I can start doing the other thing now. Trading is simple, guys, but it's not easy. And it's not easy because we have to deal with this right here. Our own psychology, our own emotions, that kind of stuff. And that's what loses us money. It's not Wall Street whales. It's not, crypto whales. These aren't the people that are stealing your money, guys. They're taking advantage of the things that you're doing, but it's not you personally. It's just what retail traders tend to do. They understand that they're taking advantage of it, but they're not forcing you to do those things. You do those things because you aren't out there, working on yourself. You're not recognized. You're continuing to do the same thing you've done over and over and over again and expecting a new result, right? Definition of crazy. Doing the same thing over and over again, expecting a different result. Don't be crazy. Don't be cray-cray. All right? And the sad thing is, most of you guys understand this, especially if you sit back for 1 second and go, okay, yeah. And you realize it, but it's often difficult for us to be able to then do the things we actually need to do, right? That's the hard part. It's easy to say it. It's much more difficult to do it because then you get caught up in the moment, right? And you think, but what if this one time it does what I think it should do? I need it to do. I want it to do. If it does it this one time, in your mind, you've already made that money, right? And if you've already made that money in your mind, it makes it hard to do anything different out there on the chart. If in your mind, you're going here and going, man, if I take this trade and if it gets to my target, I'll 10x my stack because I'm going to go all in. So in your mind, you've already made it up that that's what's going to happen. But the reality of trading is, especially the newer you are, the more often you're going to be wrong. You can't survive being wrong if you keep going all in, if you're not using proper risk management. Okay? Alvin says, like journaling, I'll start to do it later or do it on the weekend. Yeah, right. Yeah, you can't. Journaling, if you want journaling to be effective, guys, and you should all be doing it. If you are not consistently profitable, or if you are and you get into a streak where you're kind of losing more and you're not journaling, again, you're just asking to lose money. But you have to do journaling at the time of the trade because that way your emotions are fresh, the things on your mind are fresh, all this stuff is fresh. Because if you do it later, you won't be thinking about it anymore. You'll come back later and you'll start making up different things in your head rather than the way it was at the time. But you have to note the way it was at the time because that's the only way that you can sit back and go, oh, I see what I did here. Yep. Because what do we do as human beings? We minimize the mistakes we made and the bad decisions we make, right? We minimize it and we maximize the luck we have. Most of the time, it's the luck we have, especially if you're newer to trading. You make a good trade and you're like, oh my God, I know what I'm doing. Well, most of the time, let's be honest, you don't, right? You just got started. What the hell do you know? But we don't want to say that. We don't want to say, what the hell do I know? We want to say, oh, look how good I am. Look I can do this. And anybody that's been in here a few years or more is going to tell you, yeah, we all get sucked into that. And we start thinking we're really good. And we do that same thing over and over again, and we keep losing money. But we, instead of learning from that and going, okay, wait, I'm being stupid here, we just keep doing it again and again and again until we don't have any money left. And then guess what? Then we blame it on somebody else. It's Wall Street's fault. These crypto whales, they took advantage of me. The only way somebody can take advantage of you is if you make yourself available to be taken advantage of. And you know how you do that? Lack of education, lack of practice, lack of discipline, focus, consistency, effort. These things are required. You will not come into the market and get rich on nothing. It won't happen. One more thing, guys. The other bad thing about y'all growing up with this social media is you'll see people post on there how they went from $1,000 to 1.5 million in the last 2 months or something like that in crypto, right? Most of those are lies. Okay. But those that are true, make no mistake, were luck. Nobody gets consistently profitable like that in the markets. It doesn't happen. Oh, Chris, you're just saying that because you don't. No, I'm saying that because I've been around a long time and I know. But you're going to argue with me because you want to believe it's possible. And so you give your money to people that promise you quick profits overnight. Just use their system. Just use their special indicator. You don't need any of that nonsense. And if you don't know what you're doing anyway, those things are not going to help you. That's the big secret nobody tells you. They promise you what you want to hear. Buy my system, buy my indicator, and you'll instantly know where you need to sell and where you need to buy. But just go look at the reviews on those. There's always a lot of reviews that say it doesn't work, it doesn't work. And I don't necessarily believe that they don't work. I think what it is those people have never actually learned all these things that I talk about, right? The emotions and the psychology. They don't know how and why markets move the way they do. The more you know about that, the more effective every system and every indicator is. Because effectively, those systems and indicators become confirmations on what you think may be happening or not happening. But if you come in brand new and you don't know what you're doing anyway, or you lie to yourself and you say, oh, I know what I'm doing, I know what I'm doing, when really you don't, which we all tend to do. No system you buy, no indicator you buy is going to help you. I was there. That was me at the beginning. So I'm talking from experience. I'll tell you guys right now, I've seen it happen over and over again through the years as well. Again, that's why at TWC we focus on teaching you how and why markets move the way it does, right? We teach you Elliott wave, we teach you Wyckoff, we teach you SMC, the important parts of that. We teach you, always with all of that, focusing on price action and volume, because at the end of the day, and we talk about psychology all the time, because the goal is to teach you how and why markets move the way they do. Those other things just become ways of teaching you. The goal is not to teach you Elliott wave for the sake of teaching you Elliott wave. It isn't to teach you Wyckoff for the sake of learning Wyckoff. It's understanding why those things work the way they do and how they all work the same way. Some of the greatest things I get is when we have new people coming in and we'll talk about, because we do live classes 3 times a week, right? Mondays, Wednesdays, and Thursdays. And we'll be in a Wyckoff class and I'll talk about the structure and what's going on, where we can go. And then I'll show them how it lines up with Elliott wave and with price action, where we would normally look for all that. And it tends to blow people's minds away because they didn't realize that it's because they're all based off the same ideas. They're all based off human psychology, human emotion, how and why things are moving the way they do. If you're chasing news, guys, if you're trading news, you will always be behind, period. You will always be chasing the chart. It's better to take the time to learn, spend your money, spend your time learning how and why markets move the way they do, so you can potentially be ahead of that news event. Right? Because you look at it and you go, okay, well, so-and-so company double beat on earnings. Why did price drop so drastically? Well, because and then they'll go searching into the call itself and go, oh, well, it was because they said in Q4 of 3 years from now, we expect a tiny 10%, or something silly like that. But they try and make up reasons why things have to be, right? And a lot of times you'll get the same news event, it'll produce two exactly different results. And people will have to go in there and figure out, okay, well, it was this little thing they said that was different, and that's why it did different. Well, no, it had nothing, because it had nothing to do about that. But CNBC, Bloomberg, your big influencers out there, for the most part, are going to try and get you to believe that it's news events that are making things happen. Okay? Troy says, I've never used the alpha bundle from that John Wick guy on X, but would what you're saying apply to a system as well? Sure. Yeah, because so his system, right? I don't have it myself, but from what I've seen all over online, whatever, right, has all these different indicators about what may or may not be happening, right? Well, you have to figure out which one is the one that you follow. You have to understand proper risk management. Otherwise, you're going to get burned, right? Just because there's a reversal signal coming on that indicator or on any other system out there doesn't mean price has to reverse there. Oftentimes, you're going to see it continuing in the direction. It's just a bounce, right? Or a rejection continues in the other direction, right? I'm not saying it's not helpful, but I'm saying the more you understand about how and why markets actually move the way they do, the more effective something like that becomes. If you don't know anything about anything, and I'm sure John would say the same thing as well. I'm sure he'd say, if you don't know anything about anything when it comes to trading, you're going to get a lot of missed signals and you're going to trade a lot of wrong on there. If you watch some of his videos where he's explaining, his indicators and why he took this position rather than this position, that should get you into it. That should get you to see why. But that's because there is no system out there that tells you exactly where the bottom is, exactly where the top is, and exactly which way price is going to go. There's not one out there. There's no system. There's no indicator. But the more you understand about how and why markets move the way they do, and then use proper risk management, the more likely you are to actually make money consistently. So no, I'm not saying it doesn't work. But what I'm saying is, as with any other indicator out there, the more you understand about markets and the more you understand about proper risk management, the more effective those tools become. They're just tools. They're just tools, guys. Using them without any knowledge is most likely going to lose you money. Okay? Because again, if you don't know what you're doing, for instance, with proper risk management, what good is a signal? We know that no signal is 100%, right? There's no guarantee. John will, I have no doubt, I consider John a friend. I have no doubt that he would tell you that nothing is 100%, right? So if you come in with that thought, you go, okay, well, I have to understand proper risk management then. Because if I don't, what am I going to do? What happens when it's not correct? And again, the less you understand about markets and trading and whatnot, it gets even harder. How do I exit if it's going the wrong direction? When do I exit? When should I be out? And we know with crypto, prices can move very quickly in a big moves in a very short amount of time, right? You don't have a lot of time to think about that when it's happening. So trading is all about learning as much as you can about markets. It's not about picking up an indicator and thinking you're going to get rich overnight. It's not about picking up somebody's system and thinking it's going to make you rich overnight. It's not. But the more you understand about these other things, proper risk management, how and why markets move the way they do, stuff like that, the more effective all these other things become. And this isn't just something I'm saying. This is something, again, I've been doing this for almost 31 years. I buy people's systems throughout the year and I check them out. And most of them tend to work, believe it or not. But their degree to which they work depends on how much you understand, and work consistently depends on how much you understand about these things I'm talking about. Which is why I teach things the way I do. I'm not trying to teach you some proprietary system that guarantees you're going to get rich overnight. No, I'm trying to teach you how and why markets move the way they do, so you can use that understanding on its own or with these other systems and tools and indicators and stuff to be much more successful with them. That's the goal. Let me see here. Bernardo says price action trumps everything. I would say price action plus volume. Okay? I would say price action plus volume. I'm not a strict price action person. I think you can get a lot more if you understand the volume underlying that price action along with it as well. So yeah. But that's, again, that's the whole, once you understand that and you see it working over and over again, you start to understand how and why markets move the way they do. And it becomes often not what you're thinking at all. Right? Michael Johnson, what's up, buddy? He says, journaling promptly got me to stop trying to beat the system I was trading. That's a great thing. Yeah. It's hard, right? It's hard to get out of our heads. We all get caught up in it, not just in trading, but in just every area of life. We get caught up in the way we think that things should work or the way we think things should happen. Every one of you, spend the weekend. Pay attention to decisions you're making. I promise you what you'll see is most of the time you're focused on what you think should happen rather than what may actually be happening. And the only thing is in trading, it gets expensive. In relationships, friendships, lover relationships, whatever, marriage also, it can be expensive too, right? Divorce is expensive. We think about the way it should be, what we think it should be, how we think it should go, instead of what it is actually. And so we fight against what it is actually, trying to make it what we think it should be. And that's where you get people end up getting married too quick, getting divorced, giving up right away on whatever they're trying. If they're trying to learn a new skill or something as well, same thing. But in trading, that's what gets you losing money and gets you out of the market. You're so focused on what you think should happen and how you think things should go that you don't actually pay attention to what's actually going on. Does that make sense? Let me see here. Ryan, what's up, buddy? He says, hey, Chris, been a minute. Been watching for like 5 years now, on and off TWC member. Yeah, man, I've seen you come in and out a few times. Sure. Good to see you checking in. Let me see here. Let me see. Thoughts on IBIT strength and where you see it going over the next few months or years. I think it continues going up. Just the chart. We're about to pull up the charts here. I know I've been talking to big guys, but, I use this opportunity to hopefully teach you guys the things that you need to understand to be more successful, right? Now, we go into everything, obviously, a lot more in depth, at TWC, and you get it much more consistently. But if you're here, I hope to give you something that you can learn from rather than just spitting out a few charts on Fridays here. That's what I've always done. And I continue to, to keep doing that. Let me see here. So yeah, IBIT, I think it continues going up. I think it's hard to really fight against that, that particular product, but also against Bitcoin in general. Especially with the way in which it's being accepted. It's being brought into the mainstream, right? We talked about this on Beards and Bitcoin. I've said this the last few episodes, I think, of Beards and Bitcoin with Andrew and Tillman. But we started that show about May of last year. So it's been a year. At that time, we started that show. I think there was like one mention from Trump about Bitcoin. And we all kind of said, you know what? Yeah, it'd be great if we got a lot of national attention about Bitcoin ever, but we don't really see that happening, right? 3 or 4 months later, it was one of the big topics, right? And it's continued to get bigger and bigger. And look at what we're getting now. So I don't think Bitcoin is on its way out. I think it's just really getting started, right? If you've been in Bitcoin since before January of 24, You were kind of like Bitcoin. We talked about this before again on Beards of Bitcoin, but you've been like under the surface, right? It's been the whole just getting started phase. Once the ETPs came out, the ETFs there in January of 2024, the Bitcoin ETFs, it's now sprouted above ground level, right? Prior to that, it was all about retail. A couple of hedge funds, small hedge funds, stuff like that, but really it was about retail, right? Since then, it's become all about Wall Street, all about corporate, all about institutions in multiple ways, whether it's the ETFs or the accounting rule change or the Bitcoin, and because of the accounting rule change, Bitcoin treasury idea, the MicroStrategy flywheel idea, right? Yeah, so I think we continue to head higher with all that. Let's go ahead and pull up the charts here, though, guys. Let me see what we got here. Boom. Let me see here. Can we do that? There we go. So, this is it, guys. Remember up here. Don't forget those that all the way down here kept screaming that this was the top. And they kept screaming double top here, and this was the top, and that was the end of the cycle. While some of us were out here saying, no, you should be buying down here at 74,000, 80,000. Okay? Because now we're doing now, and we've still got bears out there saying, oh, well, it's still bearish. Come on now. It's not. Okay? But it's hard, right? It's hard when they make, if you don't understand how markets move the way they do, how cycles work, all these things, then they can make a great case, or make it sound like a great case of why they're correct. And you don't know what you're doing, so you're going to get scared into selling or buying whenever they do this, right? Let me tell you what, fear, I tell you guys this, every so often, the two greatest emotions are fear and greed. And of those two, fear is the greatest emotion. Okay? Remember that. Fear is the greatest emotion. Why is that important? Because if you notice, when it comes to news, when it comes to X or other social media sites, what do you mostly see in your feed? Bad news, right? Remember for a while there, all we saw on Twitter X, there was fights. Was all these fighting, clips and whatever. People getting attacked, getting jumped, fighting and whatever. Because those are the things that y'all react to the most. And I say it like you don't, like I don't. But it's what we all react to. We react to the negative. And so, again, what you normally will see is most of your bigger accounts and whatnot will get very bearish. But here's the reality, guys, and you have to understand this. When it comes to markets, there's one thing that's true. Generally speaking, markets tend to rise to the right. There's going to be times where it pulls back along the way. All you got to do is pull up a Dow Jones chart from the early 1900s. There's been pullbacks along the way, sideways along the way, but guess what? It's continued to go up. We're 40,000+, guys. So what does that mean? Well, I know it's a big thing for the last probably 2 years or so to talk about being bearish and to be shorting and whatever on crypto Twitter, right? But the reality of it is, on a long enough time frame, you're always fighting the trend. And if you're fighting the trend, then what that means is you're more likely to lose than win. Guess what, guys? You can only short to zero. You can only short to zero. But you can go up infinitely. It's simple things like that when you really think about it, you go, oh, okay, yeah. So you've got to be careful, when you're out there with what you're exposing yourself to. Because the more negative stuff you expose yourself to, the worse off you're going to be. Not just in that thing you're doing, but just in general. Believe it or not, it has a significant effect on you as a person and your views of your daily life and what's going on. And how you approach the day, how you approach your life even on the minute, the daily time frame, whatever, is going to have a strong influence on how you view opportunities. If you're bearish thinking the cycle top is here, then when opportunity presented itself here at the freaking yearly pivot, at the previous all-time high, you didn't see this as an opportunity to go long. Philbo and I both talked about it extensively. It was likely a really strong place to go long. Andrew and Tillman for Beards of Bitcoin talked about it extensively as well. Likely a good place to be long. Most people online were telling you that it needed to go lower. Now, we didn't say it definitely wasn't going to go lower. And we, told you what we were looking for to signal that, maybe the top would be in. But on a macro scale, there was nothing happening on that weekly or monthly time frame on that macro scale for this cycle that said that the top was in. And what's happened now? Just a month and a half later, not quite 2 months later, we're back up $30,000, $40,000, new all-time high. And if you were scared down here thinking it was the bottom, and these bears keep telling you that this is just a dead cat bounce, it's going to come down, then you likely didn't buy along the way. Or you didn't buy and hold to enjoy the whole move up here so far. But also a lot of that has to do with you don't know who you are as a trader or investor to begin with. So you don't know what time frame you should be looking at. You should probably be focusing on the daily or the weekly, but you're focusing on the 15-minute or the hourly. The best you can hope to do with that is that you will not lose as much money, that you might make a little bit of money. But when you align your trading with who you are as a trader investor, based on all those things I often talk about, the significantly more money you have the opportunity to make. Because you're aligning your actual ability to trade, which is determined by, again, all your goals, where you said, the time you actually have to trade, versus what you want to, all that kind of stuff, right? It aligns it with actually doing it. Okay. Fibbo says, what are you saying there, Fibbo? In trading, fear is not just an emotion. It's the builder of hesitation, the killer of opportunity, and the reason most traders fail before they even begin. Yeah. 100%. Okay. So what do we have here now? Well, right now, all we're doing, we have this previous supply structure that we pulled back into and tested as a demand structure now, right? When I'm looking at this looks like a diagonal here and a pullback. Now, if I zoom in on this pullback, this looks like ABC down, ABC up, 1, 2, 3, 4, 5. It looks like an expanded flat correction here. And if this is what it looks to be, as a diagonal here, right? This pullback is about 38.2. Now pay attention here, because if you haven't ever heard me say it before, then you haven't been listening, or you're brand new. Most of the time, when you have a leading diagonal, price won't pull back 50%. It'll usually pull back around 38.2. Why? Because you have overlapping price action that builds a base in it. Again, there is no 100%. There is not all the time it does this or that. But generally, most of the time, if you have a true diagonal, leading diagonal, price is going to pull back about 38.2 versus the 50% we often look for. Okay? So we've got this here. So I'm looking at this. So if this is in fact a 1 with a 2 as a leading diagonal and a pullback here, guess what? 5 waves up on the Bitcoin USD, the Bitcoin all-time history chart, has us right around 132, 133,000 for 5 waves up. Now, I've been talking for a while about this area right here. This is right prior to that 100,000 area, right? This is where most of the price action happens. You can tell because you've got your high volume node here. This is where the market is most interested. What does that mean? Well, that means it works as resistance if you're coming up at the bottom, right here, right into it, right? It works as support if you're coming from the top. So my thought, and what I've been saying a lot, is this idea that if we're getting like a larger degree pullback, my expectation is this 100,000 or so area to hold this support. It can wick down a little bit lower, maybe close a little bit lower, but generally speaking, my expectation is that the 100,000 level holds this support. The fact that we continue to grind here and try to push higher starts adding more and more likelihood of that being true. Okay? So when I'm looking at this, and we get in here, and, you know, maybe this ends up with like a 1, 2, 3 up here, and a 4, right? This pullback, something like this, gives you a wave 4 at 106.5 or so, or a secondary target of 99.5. Again, it's right around that 100,000 or higher, right at the top part of this, which is what we would expect, right? This becomes one large reaccumulation range right here. And this thing has been going sideways. We're just now breaking out here for about 157 days. That's just over 3 months. 4 months, getting on 4 months here from this swing high up here. 5 months, something like that. Yeah, 5 months. I don't know what I'm saying. 5 months. But what I'm trying to say is, when you have, you know, accumulation or distribution structures, the longer it goes sideways, the longer it goes sideways, the further in, you know, that it's going to go when it breaks out or breaks down. So we had, I mean, look at what we've done here. We had this range here, broke out, pulled back to the top of that range, and then took off, right? Here, we broke out and just continued going. This range here broke out and continued going. This range here broke out, pulled back to the top here, continued going, right? So all these kind of accumulation ranges and reaccumulation ranges we've had throughout this multi-year cycle here have always resulted in that same way. Even this local accumulation as part of this larger reaccumulation range here, we broke out and continued up. So normally I expect some kind of breakout here and a pullback before the breakout, but this cycle been a little bit different. Most of it has been pretty strong just to break out. So while, you know, we might think, oh, it's due, right? We always think it's due. By the way, when you think price is due to do something, slap yourself. You got to keep it real, folks, because what's going to happen is you're going to trade what you think it's due to happen. And most of the time you're going to be wrong. Most of the time it's going to continue on without you. So what I've been talking to our students about is this idea of, listen, if you're not sure about it, you don't have to go all in or all out. You can layer in and you can layer out. If you're not sure if the top is in here, you know, like right now we're going to pull back to 100,000 or something, but you think there's a good possibility we might. Well, here's the problem. If you take your profits here and it doesn't do that and instead kind of goes down and then it heads back up out of there, you're not buying that breakout there. You're going to be scared that it's going to, you know, just get a little bit above and you're going to be buying a higher top and then it's going to pull back. You're going to miss your opportunity. So for most traders, what I tell them is, listen, take some part. If you've been riding this up and down here and you think it may pull back and you want to get in if it's pulling back a little bit more and maybe make a little bit of money on your money, take some partial profits. You don't have to pull it all out. And here's what happens. If it just does this and it continues higher, you've still got money in the game going, pushing. And you can find a new entry with the rest of you have there. If it does pull back, you've got money to buy that dip there and head on. You don't have to be all in, all out with your trading. Okay? Alex T says it's definitely due. It feels like it, right? It feels like it. And often I haven't been, shy about saying that usually we expect a rally up to the resistance, up to the swing high area, a little bit before, a little bit after, and then a pullback, and then the big breakout. But again, as I've shown you here, we often don't get that. We got it here, but we didn't get it here. And we didn't get it here, right? But we got it here, right? So, again, often we think that we're going to get that, or we'll get even bigger pullback. But this cycle especially, and I think it's due to the length of time we've been going sideways. These sideways things we've been doing, guys, have been months and months and months and months at a time. Half a year at a time or more. That's a long time to go sideways. So when it gets a chance to break out, everybody's ready at that point. Everybody's already sold into that lengthy consolidation, retail-wise. And that's why it breaks out and it tends to continue going. So right now, unless we're breaking down, below this swing low here at basically 100,762.5 on this chart, my default idea is that we continue to go higher. My default count at this place is there's a wave one and then there's a expanded flat here. And we'll get up. And again, if that's a 1 and a 2, has us looking around 130,000 for 5 waves up. That pullback then, as I was talking about, would be expected to get us back here around 106 or 99.5, right in that area. So basically, where? Right to the previous resistance. This is a base. This is a base. This is all one giant base here. So the idea is we pull back to it, and then we go again. So if I'm looking at Bitcoin, that's what I'm thinking. That's what I'm thinking there. And that's why. Now, do I have to be right? Not at all. Not at all. I think there's a good chance that's what we get. But we need to have follow through, right? We need to have this thing rallying up higher. And it is the weekend coming in. And it is a holiday weekend. It's kind of hard to think that we would be heading up on that, but it's happened. And maybe it does this time as well. If we continue to pull back through that low there, though, I think there's a good chance we get down here to about 96,000 before we then rally up higher. So I've got my plan in place, and it's not based on the 5-minute time frame because I'm looking at the big macro moves here. I'm looking at the overall macro. What are we doing here? But that has to be the level there because this is 5 waves up here. So it has to break down below that to signal, okay, that's probably a last move there. And then we get that 38.2 pullback from this point right here. Yeah, to kind of get you that 90, almost about a 96,000 there, which is what? The high volume node. What did I say? If you're above the high volume node, it works as support. If you're below it, it works as resistance. I'm okay with either thing happening, to be honest. If it wants to pull back to 96,000 and give us an opportunity to buy, what is this, $15,000, $16,000 lower, I'm good with that. The problem is most people won't buy or won't be looking to buy in that area. They'll get scared because all the bears are going to come out of the woodwork saying, I told you it was the top. I told you we were right at the top over here. It just went up a little bit higher. You didn't get to get any of this because we told you it was the top here and you sold all the way over here or whatever. And it's come back up and you haven't bought again. But we were right over there and it gets down there and then it goes without you again. And then what? Right? But if this thing's breaking out higher, to me, there's no reason not to start looking up toward 120, 130,000. Now, Does it have to get up there? No, I could be wrong on my account somewhere in here, but again, we're looking at, if you just want to do from this latest pullback, you could have a simple target here, guys, a simple little price action target that says if we break out through the high here, we can go to 114, 850, 860. Pattern target, quick, easy pattern target, right? So you can play a smaller move in there if you want to. But a lot of you guys are in here and you talk about how you're bull cycle traders, right? You want to ride the whole bull cycle, but then you get scared when it starts pulling back and you sell. And then you try to buy in again. Then you try and sell again. And so that, again, that goes back to what I was talking about earlier. Who are you as a trader investor? What actual time frame should you be looking at? Because if you're sitting there lying to yourself saying you're a full cycle trader, you're looking to ride this all the way up, and then you're not doing that, that creates cognitive dissonance in your head. The psychological side of it. And it makes it hurts your decision making. It hurts your decision making because you don't have alignment in your thoughts and your actions. And this isn't me just saying this. I've got a master's degree in psychology, so I got that. And almost 31 years of trading and teaching, right? So, when you're looking at that and you add in, my education, I guess you could say, in that, along with what I've noticed practically, in practicing what I do here, in doing the trading for 30 years and talking to all the other thousands and thousands, tens of thousands of traders over the years, and the ones we have as students right now and all this, right? I'm telling you right now, when you have that cognitive dissonance in your head, when your thoughts do not align with your actions, it creates difficulty in decision making. And that's why you won't buy when you think you should be buying and you won't sell when you think you should be selling. You guys ever do that? Tell me you haven't. You sit there, you're going, this looks like a great place. I should probably buy here. This makes sense. And you like legit give all the reasons why you should be buying there. And then you don't. You talk yourself out of it, right? And then what happens? Price does exactly what you said it was going to do, right? And you kick yourself and you get upset about it. Most of the time, that's a product of that cognitive dissonance in your head. When what you say you are or what you say you're doing differs from what you actually are or what you are actually doing. So again, it's not that Wall Street or crypto whales or somebody's stealing from you or manipulating you. It's that you aren't sure of who you are. And it's the same thing in life, right? If you don't know who you are in life, you just kind of wander aimlessly. If you don't know who you are in a relationship and what you expect out of a relationship, you just kind of muddle through it. You're never really happy, right? You have to have these things understood, guys. You got to stop trying to wing your life. Just wing it. It doesn't work. It causes more chaos and discomfort for you than it will, happiness. All the research we see today talks about how unhappy people are, especially here in the Western world. How unhappy people are, how miserable they are. Why is Gen Z so unhappy? Why are millennials so unhappy? It's what they're always saying, right? Gen X just wants to be left alone. We do. But realistically, why? It's because people aren't determining their life. They're just kind of they don't have oars in a boat, right? And a direction and a compass. They're just kind of out in the middle of the sea in a boat without any oars, without anything. They don't know how to read the night sky. They don't have a compass. They don't have a direction. They're just kind of floating around. There is no happiness in floating around, guys. Happiness comes from having a goal and a conviction and a position in life, not just in trading, but in life, and making and accomplishing things along the way. That's where genuine happiness comes from. You're not going to get it from some other person. You're not going to get it from making $1 million trading. That won't make you happy. You'll end up giving it all back. Okay. So, I mean, these are the things that you need to look at, because often the things that are holding you back in trading are those same things that are holding you back in life. Remember, you can't live two separate lives. You can't live your trading life and the rest of your life differently. That your brain does not allow that cognitive dissonance to work. What you do in one area of your life, whatever you're doing stronger, whether it be in the trading side or in the other side of your life, whatever you do stronger is going to bleed over into the rest of it. So that's why I always tell you guys, if you walk around saying, oh, I'm a victim, it's always somebody else's fault, whatever it is in your life. If you don't take responsibility for what's going on, guess what? You're not going to do that in trading either. And when you can't take responsibility for the things that have happened, you can't say, okay, well, what can I do to change that? How can I move beyond that? And you sit there and you continue in that perpetual kind of hell that you're in. Okay? This is the stuff that matters, guys, not the charts. Because if you don't have this down, you're not going to make any money that you're going to be able to keep or make consistently with the charts. It's just not going to happen. Those of you that are getting some from this, all right, great stuff. I promise you it's going to help you in life, not just in trading. And guess what? The better your life is going, the better every other area of your life is going, the better your trading is going to go too, because your life is going well because you're doing the things you have to do so that it does. And that becomes a system of actions. And you will apply unknowingly, sometimes, usually, the system of actions to everything you're doing, which includes your trading. Does that make sense? All right. So anyway, so here we are with Bitcoin. Looks like we're getting a little bit up here. We're still trying to find some support above that previous all-time high there. So now you know what my plan is kind of here, looking for this as we kind of continue to go here, right? Again, you can look at your general just pattern target there. Again, based on the height of this pullback on this Bitcoin all-time history chart. You have to figure out what it is on whatever chart you're trading, but on this chart, it's about 115,000 is that pattern target. If you're popping up through that, don't be afraid to start looking up toward that 130 area. Okay. Let me see here. The dollar, again, it's doing exactly what we've talked about it doing, following down. Everybody was giving me hate as it rallied up here, and I told you we were just looking at this flat correction and going to come down lower. They've shut up. I haven't heard a damn thing from them since about right here. And there's a few people constantly on my timeline. They've shut the hell up again. Because they should, right? You come out there, you act the fool, and, and people are going to see that. I don't understand why people want to do that. Why would you want to look like the fool online? I don't get that. I don't guarantee that price is going to do one thing or the other. I say, listen, here's what I'm thinking it's going to do because of this, 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 and this. But if it doesn't, if it's doing this other thing at this point, then it's probably to, do this other thing. That's what we do with trading. Strong opinions loosely held. Peter Brandt says it all the time. That's what you have to have in trading. What you should probably have in life. You have to have something that you believe in enough to you have to have conviction about it, right? But not so much that you ignore the new information when it comes in that tells you maybe you're wrong. That's the way to look at it. So here we are. We're continuing to come on down here. Again, based on the height of this pull, we pulled, I think it's like an ABC and then an ABC. So it looks like a WXY. It's a 38.2 pullback, which is your wave 4. Based on the height of that pullback, you end up having a wave 5 of what I believe may be a wave 3 target here, right around 95.22. That's a pattern target down there. Okay? So that's kind of what I'm looking for the dollar ultimately to kind of continue lower against the other currencies, right? This is the DXY. It's a weighted index. What does that mean? It means the prices that make up this, right, is your USD dollar, USD, your euro against the dollar, your Great British Pound against the dollar, your Swiss franc against the dollar, your yen against the dollar, right? All these things are added in here at different weights. And so over 50% of that, 50, whatever it is, I don't remember at the moment here, like 55%, 56% or something like that, of this weighted value is your euro against the dollar. The next biggest one is your yen against the dollar, which is about 11 or 12% of this. So if you're looking at your euro against the dollar and your yen against the dollar, right, that's almost 70% of the weighted value of the DXY by themselves. And then everything else is, like 5, 6%, 2%, whatever, getting down there. So that's why your DXY will often look like the mirror of the Euro USD. All right. So yeah. So anyway, expecting this to continue down overall, to continue lower here. Here's the great thing, guys. When you understand how and why markets move the way they do, when you understand how to read charts, you stop worrying about things like Trump said, oh my God, we need to slap tariffs on Europe, or oh my God, we need to ramp up tariffs against China to 150%, or oh my God, this is the big beautiful bill that's coming in, and and people freak out going, oh no, this is what it means, oh my God, right? These are all knee-jerk temporary reactions. They're noise in the world of trading. But people, most traders, take them as directional points. The fact is, the direction of the trend is already in progress. These knee-jerk reactions are just temporary in that overall direction. Very, very, very occasionally, you'll get a news event around the time a trend is planning to change anyway, is setting up to reverse anyway. Most of the time, you don't. All you have to do is look at 9/11, back at the beginning of the millennium, right? Everybody says, oh, that caused the market to go down. No, the market was already coming down, right? And as a matter of fact, it only went a little bit further after that before it went up. The market, the trend was already in, right? Oh, these people that come in here and do their stupid little free viewers on whatever stupid website. So stupid. Really hate it. The scammers, the bots, man, they just, they make the internet such a miserable place to be, it seems like. It makes it hard to communicate. They always put in their stuff there trying to be popular, trying to get people to use them. I don't see how they really get the traction from that. I have to believe most of y'all are smart enough to stay away from that nonsense. Or on X, all those fake accounts that'll come on there, right? They'd be like, oh, so-and-so nailed this so perfectly. You should follow him at blah, blah, blah. You watch those guys? If you ever watch those accounts, guys, because you'll see like 4, 5, 6 months later, they have barely anybody else following them. They're still at 2,000 or 3,000 followers. It's such a waste of money. But it's hard getting your attention. I'm not great at marketing. I'm fortunate that I've got 1,000 people watching right now. I haven't figured out the marketing side really well. But it is what it is, right? But I'm not going to jump on nonsense like that. It's just a waste of money. It's stupid. I wouldn't want my name to be associated with that kind of spamming of other people's content. That's stupid, right? Can't do it. I can't do it. It looks poorly on me, and I wouldn't want to do that. So anyway, so the dollar, yeah, looking good there. Look at Ethereum, guys. So remember, Ethereum's bear market low was here in June of 22, right? Before Bitcoin, which was over in November of 22, right? What do we have? We have this rally up here, and then this pullback, and now we've got this huge move up here. I think we're looking good. I think we're going to break on out and head higher here. What's potentially going on here? I mean, I think overall, we can measure out this entire pullback here. and we can say, hey, we've got a pattern target up here of about 13,791. I wouldn't be surprised to see it hit that area. Does it have to? No, it doesn't have to. But I wouldn't be surprised. And right now we're at 2,600. So what is that? Not even 6x, 5x maybe? Maybe about a 5x? It's not too bad on an alt, right? But I think overall, I think we head up there. I think we're, you know, look at that. This is 3 waves on the pullback here. We've rallied up above that second wave. This pullback is complete. It's not coming down here, or it shouldn't anyway. It's 3. So again, based on the height of that pullback, that bear market drop there, should be looking up there. Locally here, let's kind of zoom in here a little bit. Locally here, normally I would say maybe a push up into this area right here, right prior to the yearly pivot, and then a pullback, down here, and then the big move out. If we continue up through there, though, I'd look here around 35, 36 and a half or so as the next target. If we continue breaking out through there. But yeah, right now, if we can get rejected around this 3,000, 2,900, 3,000 area, I would expect us potentially to, we could do like some sideways here that keeps us maybe above the 23, 2,400 area and then break out. But if we're breaking down below that, I would look us pulling back down here toward 2,100. But then we'd be looking for, the big move out. But again, if we do end up breaking up through this, let me see where I can find it here. This yearly pivot at about 3,100. I think, I would look up there around 35, 36 and a half as potentially the next target on that. Followed then by 39.86 here. So that's just the way I'm looking at Ethereum. Again, we kind of talked as we were down here, and I kept telling you all about how everybody, the sentiment was so much in the dirt, whatever. We're probably much closer to a reversal than not, and we'd be watching it. And sure enough, we got it here, and we got it here, and then boom, and shot up. That was that big, nice move there. Ethereum's one big triangle. It does look like this could be a triangle, right? A, B, C, D, and an E, and then go up, maybe. But either way, whether that is or whether we're looking at, the pattern target based on the height of that pullback is up there. So, I'm definitely looking at it getting above the all-time high here. The all-time high is right around 48.67. That's a couple of $1,000 above where we are right now. We should easily be popping out above that all-time high. Let me see here. Do you think Q4 this year will see a nice rally or even a blow-off top for crypto? That's interesting. I talked about last year that was probably what we would see. But I'm not necessarily convinced at this moment that that's what we'll see. I'm always hesitant to say things are different when it comes to markets, but there is substantial difference in, like the Bitcoin market right now. Again, we have substantial institutional, involvement, since the ETFs. And that materially appears to be changing the market itself, right? We hit, for the first time ever, we hit a new all-time high prior to halving. Not that, halving just generally tends to align with liquidity events, but when we just look at those things, historically, that is different. Last market top, the last cycle, we had a double top. We've never had a double top. In all the years prior to that. So things are, working themselves differently here. So I can't say with a lot of significance that we would have that that blow off top in Q4. My expectation would be that if we're going to have it, it would generally be expected about that time. But with the way that things may have changed here, do we see the cycle extending a bit? That's the one thing I don't, I'm not too sure about at the moment. Do we see the cycle extending? And I'm still kind of looking at that, right? I think I'll have a better idea when we see how the first half of the summer goes, basically June starting into July. If we can see some rallying now through June, that might change the way I look at that end. But we'll have to, I think for me personally, I don't really want to say that I think this or that's going to happen at the Q4 this year because of how things have changed. I want to see how it's looking through June, getting into July. And then we'll kind of work from there, I think, is it'll be maybe a better idea of how we would expect things to happen Q4. But otherwise, if it's like, generally every other cycle for the most part, we would normally expect that, right? Do I like any specific Ethereum ETFs? No, I don't have a preference at all on those, honestly. Yeah, so I don't have anything personally that I think is going to happen with that. Let me see here. Tesla, could we be seeing a what? A flat correction? On what time frame? Let me know what time frame there. And I'll pull up a Tesla chart here real quick. By the way, if you guys haven't yet, pick it up, guys. Pick up the book. You won't be sorry. It's available on Amazon. If you've got Kindle Unlimited, you can borrow the book for free on there. Well, I say for free. You have to pay for your Kindle Unlimited, right? But you can get it on there as well. Let me see here. TSLA. And Whole Wallet Protocol, the mainline novel there, is going to release on the 27th, first day of the Bitcoin conference. So get them while you can, guys. Oh, on weekly? Flat correction where? You think here? Like ABC down here, ABC up, and then get down here? Possible. The idea would be we'd have an A, B, C, and then a W, X, Y. And then we'd have, 1, 2, 3, 4, 5 coming back down around here. So yeah, the setup there looks like it is. Can you share the link in the comments? Really? You can't type that in? Are you going to make me type it in? It's awful. Let me see if I can do this here real quick, and then we'll get back to TSLA. There, LXT. If I spelled everything right, there it is. Man, I swear, some people. I'm just kidding. The other thought here, Andrew, would be maybe like an ending diagonal here. So maybe like A, B, C. And honestly, I'm a little more likely to think this may be what's going on. And then ABC gives you a W, X, ABC for a Y here. But then we get like, a 1, a 2, 3, a 4, and we get a 5 here. I think this is probably more likely. But again, when you're all you're getting is three waves, and that's all you're getting. It leaves you with a couple of possibilities until you start getting some confirmation on that, right? So I could see something like this, and based on that, Let me make sure that wave 3 is not shorter than wave 1 here first. No, it's bigger. Okay. So, I mean, based on the height of this pullback, we'd be looking up here about $807 as a pattern target. If we can get an impulsive breakout and close here above this yearly pivot at 343.73 on the, again, on the weekly time frame, that's going to indicate that the low is likely in here. And so we'd head up there for that. But I mean, my first thought would be like this here. The book is for Forked Nations. It's the geopolitical book, thriller that I just kind of put out there, that I got published. It's on Amazon. You can look up Forked Nations, Forked Nations. This is part of a 9+ book series. It'll be anthology series. It's going to be, going through the whole thing from collapse to what happens afterward, making you think about things like the philosophical underpinnings of power and money and Bitcoin. The great thing about that whole universe that I'm writing about is that all Bitcoin stuff adheres to the white paper. So nothing's going to be like, oh, this thing happens. Bitcoin can do this thing that it really can't, which I think is great because most Bitcoin fiction, it takes that phantasmal approach to it. But yeah, you see what I'm saying here, Andrew, as far as this goes here? It's possible, we get the 3, but we would expect this to come down here, like a 1, 2, 3, 4, 5, and sweep this low down here at about, what is that down there? At about 101. But my initial thought is it's maybe more likely to be a diagonal. So we get one more ABC up here for wave 5, potentially heading up here toward $807 as that pattern target based on that there. Does that make sense? Come to Austin to sign some books. How many people you got buying books over there? How come? So yeah, I think, again, could be potentially a flat correction coming on here, but as long as this keeps going up, I'm thinking we're probably getting a diagonal coming off here. So yeah, you get your 1, 2, 3, 4, and then your 5th wave up here as you're doing that. Let me see here. In case you guys weren't paying attention, I had some charts on Scott's show on Monday. Oh man, we're over here half. That's okay. I want to talk to you guys for a little bit here. This is one of my favorite alt charts I'm looking at the moment here. Look at this chart. This is Super USD. I love this. This really looks like accumulation here since March of 2024. And so ultimately would expect this to happen higher. Minimally targets of $2.87 and then $3.47 or so. But potentially seeing it heading up to 389 after that, and then 596, and maybe even higher on that. But this is a lot of great solid sideways movement, rally off the yearly S1 pivot here. I mean, I just love this overall chart. We'll probably get a pullback, but then on that pullback, I think it's one of the better reasons to be looking for a long on all that there. Hey, Chris, how did this last candle change the count on SUI? Well, I don't know. I haven't looked. Let me see where my SUI chart is. Let me see here. I guess this is what we're looking at. Can you pull it up here for y'all? Yeah, all I would say is probably like a 1, 2, 3, 4, 5. So that would just move your A there, here. So wave B is now out there, $4.20. And let me see here. Oops. Trying to grab this thing. Get it out of there. Yeah, so this looks like this may have printed the actual spring here. We rallied up into the rejection, big volume, came down, still getting big volume on this drop here. Looking for it to push back up. If we can break out above $4.20, that should indicate that wave 2 is, or what I believe maybe wave 2 there is complete. And then that would give us a minimum expected wave 3 target up here at $5.91. And potentially then up here at about $6.67, pushing up there. But yeah, if we can get that breakout above wave B at 420, I would look up there toward that. If instead we're breaking down below this swing low here at $3.11, basically right here, where I've got kind of this wave 4. If we're dropping below that, that'll probably indicate that 5 waves up is done here. We're going to pull back a bit further, but yeah, right now I'm looking for that to hold there. Daily doesn't look terrible. Stochastic RSI oversold here. Reset down and oversold. RSI still bullish above neutral. Want to see this start curling up. But right now, that's kind of what I'd be looking at. Yeah. So yeah, that's what I want to see. I want to see that break up above 420 to increase the idea that the odds that we're probably going to 591 next on that. Yeah. I was just looking, I'm just kind of looking here going, if this is 1 completed up here, not 1 of 5, right? If this is 1, we could see maybe some sort of sideways here as a wave 2. So if instead of going up, if we're breaking down further here, I would look to see if this $3.17, 18 cent area holds as support. And maybe we get like some kind of short correction here for wave 2. Before it heads up higher there. Where are we at? See, that 50% brings us back down through it, right into this, high volume or low volume node. So yeah, if we are losing that wave 4 there, that swing low at that 311 area, I would probably be looking closer down here to around $2.72 and say that's maybe like a wave 2. And then we look for the next move up. But if instead, like I said, if right now, if we just kind of break up by that 420 and start looking up there higher toward that higher target on that. But anyway, that's where we are. Let me kind of zoom in a little bit here on Bitcoin. We're getting a little bouncy bounce here. We'll see if we do this. So like I said, it looks like an ABC down, ABC up, and then 5 back down here as a flat correction. So really kind of wanting to see this this move above 111, 957.50 here on this chart to kind of, because that would be the wave B, right? So it's ABC down as A, WXY as B, and then 1, 2, 3, 4, 5 as an ending diagonal for wave C here. And then locally a 1 and a 2 here. So locally, if you're looking at this, that's going to be a 1 and a 2 there. You got a 5-wave target up here at about 113,379 off that. There, okay? So be careful with TLT. That's pretty close to that that all-time low on TLT right now. So you could probably end up sweeping that, looking at that there, right? All right, folks. Well, that'll kind of do it. I spent more time talking about the actual real things that matter as far as trading in life goes than what I intended, but hopefully you got a lot out of that. Again, Bitcoin, we just want to see that breaking out there, and then we've got some potential run to 130. We'll see if we can get there, which opens up a lot of really good numbers if we can. But if you want to learn more, if you really want to learn about trading and how that applies to life and all that fun stuff, you can of course join us at texaswestcapital.com. We'd love to have you there. A lot of the guys in this chat are currently there or have been there in the past. I'll give you an honest opinion about it. I don't have anything to hide. I think we do a pretty good job there. But $97 a month, man. You get everything that I teach. You get everything that Fibbo teaches. You get Andrew's and Vince's charts as well. You get live trading with me on Mondays, Tuesdays, and Thursdays. Mornings there. You get live education for an hour a day, Mondays, Wednesdays, and Thursdays. I'm sorry. You got all our course stuff in there, and you get such great people, guys. I'll be honest. We got really great people like Andrew and Sats and others that are in there that I think you really enjoy, and they love talking charts. So that's kind of the great things, right? You don't have to do it on your own. Try for a month, though. Try for a month. Maybe you don't like it. That's fine. It's only $97, guys. That's it. But I guarantee that if you at least put your effort into it, you're going to learn something that's going to help you out in the long run in that month there. At least one thing, at least. And hopefully, it'll be about risk management, because that's the thing that I see that most people still struggle with, is understanding that they need to have proper risk management, much less know how to do it. So, as always, remember, the only thing you control is how much you lose. So please keep working on that risk management. If you're in TWC, don't forget I'm gone now. I'll do an afternoon update for the BMA for the Bitcoin there, but there won't be a market wrap tonight or an evening BMA, and then I'll be back on Tuesday after the long weekend here, guys. Okay. So no live trading Monday morning, obviously, but the markets would be closed Monday morning anyway for the 3-day weekend. So we'll be back on Tuesday. And if you get a chance and you're really looking for some good reading, guys, Pork Nations is there. Leave a review. That apparently I heard that helps with sales. So people are scared to buy if there's no reviews. Funny how that works, right? Y'all trade safe. Have a great weekend. Hopefully we'll see you in TWC. If so, please say hi. Tag me in a chat area. I'd love to say hi. Brian would love to say hi. Fiboswani. Tag him in there. Tag Sats in there. Tag Andrew in there. Heck, tag Bernardo in there. They'll say hi. They'll talk to you about charts all day long. Alvin. All right. Y'all take care. Thank you so much for sharing a bit of your time on Friday with me. And don't forget, we'll be back on Wednesday with Beards and Bitcoin, 11 a.m. Central, 12 p.m. Eastern. If I happen to make it out there to the Bitcoin conference, we'll just do it all live from there. If not, Andrew, not this Andrew, the other Andrew and Tillman from Arch Public will be coming to y'all live from there, and I'll be here. Seeing you guys on there, all right? Y'all take care. Have a great weekend. Trade safe. If you're in the U.S., please be careful. Come back with all your fingers and toes and everything else after this holiday weekend. Take care, everybody.